This is the sixth video pertaining to options trading, and we're going to dive deep into what implied volatility is, or IV in this case. So implied volatility, we like to use it as a multiplier factor. So Tesla has a pretty good RDR, that price range of about that $8 to $10. Why is that important? Because for your option contracts, you need the price average, you need your price fluctuation to move in your direction about $2. That's because of delta and gamma. We'll get into another video pertaining to the Greeks. But once you go past those $2, then you have your implied volatility that starts ramping everything up. And Rho and Vega have a little play with that. So some key notes. There's something called the breakout strategy, and there's also something called IV crushed. So let's begin with talking about the breakout strategy. When price action continues to break structure, so it makes a high, it retraces, it comes back, breaks that previous high, that's break of structure, the IV begins to ramp up. And as price action begins to continuously move up, breaking out, your IV begins to increase significantly, acting as a multiplier. This is where you can see people on Twitter and X showing them 1,000% gains, 600% gains. That's where those are coming from, is that IV. Now, the opposite of that is IV crush. And I'm sure a lot of you have witnessed this. You may be thinking to yourself, well, I got into a call. It's moving up really good. It only pulled back a little bit. And I don't understand why I'm at break even or I'm at a loss. This doesn't make any sense. I guessed it correctly, but it's still down, right? That is because you had bought the contract at a higher IV. So in order to play IV, you have to have price action to continuously come up without any large pullbacks. As soon as you get a decent sized pullback, maybe like a 1 or 2%, that 1 or 2%, it may not seem that big of a deal, but with option contracts, if your IV goes from 150% down to 80%, that significantly decreases your option premium. So you have to take IV into account. IV and delta are my best friends when I trade option contracts, and the bid and ask tell me my stop loss. All right, everyone, stay tuned for the next video.